Mr. Manoj Rane, Managing Director and Head Fixed Income and Treasury India of BNP Paribas, who joins in live on the show. Mr. Rane, if you could just give us an indication as to what you make of the rupee testing those 53 levels to the greenback and where you see the rupee headed now.
See, actually, it's not much of a surprise because, after RBI, initiated the measures to address rupee volatility 3 or 4 months ago, we've seen volatility reduce, but really nothing has been done in terms of addressing the issue on inflows, and we haven't seen much inflows. One of the significant moves was also to, incentivize non-resident external deposits. Unfortunately, anecdotal evidence is not very supportive, so hardly about $3 billion of that inflows have come. And, balance on the NRE account alone in terms of accretion to the NRE account. So in terms of all other factors and considering the significantly large trade deficit as well as current account deficit, continuing significantly large gold imports, I think all these factors mean that the currency will remain under pressure. And, there is really only so much that the regulator can do. And, RBI's avowed stance has always been to iron out short-term volatilities and not really take a position on what should be the level for the currency. So I'm not too surprised by this depreciation, and given the fact that market liquidity is quite low due to significantly smaller limits that banks and other participants have in the market, short-term movements indeed sometimes get exaggerated.
Right, so Manoj, where do you see the rupee going? Because there is a view that you will see the rupee drop below 55 in the very near term.
I do feel that, a large part of the market will not be very surprised if it heads to 55. And typically when this kind of, an expectation builds up, then, it ends up coming true. Also, given the fact that with significant current account deficit, etc., some amount of depreciation is to be expected. Plus the fact that it would also discourage, large imports in one way or the other. My personal assessment is that RBI may also not be too uncomfortable with that happening. So I would think a 54 to 55 level is possibly is possible, in the foreseeable future.
Also, Manoj, should we see the rupee head to the levels that we just spoke of, maybe 54 or 55? It works on imported inflation, which, possibly will then feed into core inflation and make the RBI's ability to cut interest rates further that much more difficult. Do you see that happening?
Very likely. In fact, I think that's precisely the reason why everyone was so surprised with the 50 basis point cut that was, delivered a couple of weeks ago. I do think it will impact on RBI's ability to cut rates going forward. And I think, really speaking, RBI was looking for lead from the government in terms of more fiscal discipline and cutting of the fiscal deficit, which unfortunately hasn't been delivered. So I think as of the moment, it's not a very easy job to be in RBI shoes.
Manoj, one of the concerns that UBS cited when they said that they expect the rupee to touch 56 to the dollar was that if the exchange rate takes its cues more from the capital account side till better fundamentals emerge, then regulatory risk must rise in importance. What do you make of that?
No, I think this is part of the problem. Of course, the rupee will continue to take cues from the fact that so much of capital account is required to support what has been a very painfully continuing current account shortfall. Add to that the fact that the economic growth situation does not look great. So capital flows in the form of investment flows are not going to be that large. So definitely it will take cues from the capital side. But this again is a lot to do with sentiment on India, and the downgrade and outlook by S&P has not done much to bolster it. But I think fundamentally the issue remains on flows. The fact that we have $56 billion of gold imports, the fact that the petroleum bill is, oil bill is 47% up, the fact that invisibles possibly aren't keeping pace to the extent they should And add to that the fact that, with little investment activity going on due to a lot of uncertainties, not much is going to come in the form of FDI, etc. I think so. I would much rather focus on flows, and the flows tell you all that you need to know, that the rupee is unlikely to appreciate in a hurry, to put it mildly.
Right. Also, Manoj, today we saw the rupee touch 53 and come off very quickly from that level. It's at 52.95 as we speak. Would it be right to assume that maybe we are seeing some sort of covert intervention by the RBI through public sector banks, or would the assumption just be that exporters are exiting?
It's possible, but if you've seen how at a micro level the market has been behaving almost every hour, whenever you see prices, rupee come off, you see bids coming in from oil companies for their imports, and moment you see it move up, some amount of selling comes. So it's possible there could be covert intervention. But I must also say that, when you see consistently new highs being reached, invariably market, is nervous at that point of time. And as I was mentioning earlier, banks have had their net open positions reduced significantly. So in case someone has a client flow, you actually end up rushing to take it out. And when you see the significant move, then people don't want to do anything. So you just see a bit of a come off. So I think it's pretty much a par for the course in terms of market behavior. And I wouldn't read into it that it's because of covert intervention.